Welcome to the Real Estate Investing Club. This is the place everyday real estate investors gather to share their best stories, biggest insights, and favorite tactics to grow a portfolio of cash-flowing properties in today's market. Here's your host, Gabe Peterson.
All right. Welcome back to another episode of the Real Estate Investing Club. Again, December 8th. I know this is the third episode that I've said it's December 8th, but we try to run through them on Fridays. So we're closing in on Christmas. I am super excited. It's my favorite time of the year. Got all the family coming in, and I'm just stoked about it. But another reason I'm stoked is because we have Trevor Mauch with us today from Carrot.com. I'm sure all you guys who have been in real estate for a while know Carrot.com. They crush it in the website space and the SEO marketing, that kind of stuff. When you need a website to get motivated seller leads, they're the people you go to. So we got one and only the Trevor Mauch, who I believe you founded the company, right, Trevor?
Yep. Back in started 2014 and in 2013. Yeah.
There you go.
Yeah.
So thank you very much for hopping on the show.
Dude, Gabe, I appreciate it, man. And like I said, thanks for the patience on us aligning schedules. A perfect time, though. Like I said, we're leading up into the holidays and right before the new year to get people thinking, which is good.
There you go. I told you before we got on here, we like to start with stories. So I know you got a good one. Why don't you take us back to the beginning of your story? How'd you get started in real estate?
Dude, so I'll zoom back really quick. I want to set context for people so they kind of can see the little points that led up to today. So today, own Carrot, like you'd mentioned, about 50 or 60 employees now between that company and Investor Fuse, the other software company we acquired, into the multiple 8-figure a year revenue side of things. Then I buy commercial properties mainly for the buy and hold side of things. So that's my investment strategy. Just now wrapped up an investment. Actually, today we close next week on the loan of a building that we're doing over in Richmond, Virginia, with a partner of mine, Danielle Clayman. And so that's where I usually do the investment side. So let's go all the way back, man. So I got my first property in 2004. Okay. And so I would have been 2021. I would have been 21 years old in 2004 in college. And the way that I started, honestly, I didn't have any money, didn't have any credit, just like most college kids, experience. And I remember watching the darn Carlton Sheets infomercials that were popping up. And my dad had bought the course, hadn't really done anything with it, and was kind of sitting over there. And I kept talking about it. Him and I would talk entrepreneur stuff just for years and years and years and years. Now, I thought I wanted to be a landscaper at one time. So in high school, in the summers, I would just jam on landscaping projects, not maintenance, but like building the stuff out. And I'd go up there with my notepad and kind of draw out what we could do with their landscape. And I get a bunch of my buddies on a weekend and we would just jam out that project. And that was pretty cool because it showed me how to sell, right? I would literally go up to a house that had a crappy yard and I would draw on their porch on a piece of paper. And I would say, hey, what if it looked something like this? And I got a few people say yes. So that was interesting. A lot more people said no. But I learned I didn't want to do landscaping because I was picturing going, man, I can't do this. I can't picture myself doing this hard work like this for the next 20, 30 years. And at that time,
you were the landscaper.
I was the landscaper, dude. Like it was me and my college baseball buddies. Like I would design it and then we would come in there and just hammer it out in a couple of days usually.
Nice.
And made some good money, for some high school kids. And I stretched that into my freshman year of college too. And I had to really ask that question, like, do I want to do this for a long time? Is this going to get me where I want to go? And at that time I had a massive limiting belief on employees. I don't want to have employees. They're going to tie me down. We might get into this a little bit later, but we all have these money mindsets or these mindsets that either serve us or don't. And that was one of the ones that did not serve me. Yeah. So I gave up on that business because I said, I don't want to hire employees and I don't want to do this work forever myself. What's next?
Yeah.
So went into college, thought I wanted to be an attorney, actually, Gabe, because I had
I was going to.
Yeah, dude. So I had an amazing college professor. His name was Ari DeGroot. He recently passed away, unfortunately, but just such a inspiring guy. Number one, like it should have been the most boring class in college, business law. But he was going up there teaching business law, and he seemed excited about it. And he was teaching us business law through his real estate deals.
Oh,
So
nice.
he bought and hold apartment buildings and duplexes and triplexes and stuff like that. And he was just kind of showing us some contract law, and he would bring up some of his deals and his contracts, and we would learn through that. And dude, I go, man, if that guy's that excited about life when he comes in here teaching these classes, I want to do what he's doing. I want to be an attorney and I want to be a real estate investor. And I got half that right. I flunked on the LSAT, man. I got a 4.0 in college, and I did so bad in the LSAT 2 different times. I couldn't get into any school.
Ooh, yeah, it's a tough test. I actually liked prepping for it, but once I actually went to sit for it, it's a stressful thing to do.
Man, it was the hardest test I'd ever taken, and I'd always been a pretty good test taker. And I got a bad score the first one, so I took the whole prep course. I had to go up to Portland, and they guaranteed a better score, your money back.
The Princeton Review, right?
Yeah, man, and I got a worse score on that next test, and I felt so bad. I didn't even go ask. Yeah, I felt so bad. I didn't even go ask for my money back. I'm like, I don't deserve to get my money back in this. I did so bad. So that kind of set the stage for me. And in that year, my dad had that course, and he came to me one day. And he's like, hey, if you're serious about doing this real estate thing, I'll give you this Carlton Sheets course, and you won't have to pay for it if you do a deal, if you buy a property within the next 12 months. If you don't get a property in the next 12 months, you got to give me $500, which I didn't have much money, right? I had a little bit of money from my landscaping thing, but that was about it.
It's a good strategy on your dad's part, I feel like.
Dude, it worked well. And so I took the challenge and ended up going to the courthouse and finding properties that meet certain criteria. Ended up getting a 4-plex as my first deal, no money down, 100% Carlton Sheets thing, cash flowed from day one. Owner carrying the note. I still own this property today. It crushes it on the cash flow, and that's what got my start.
Nice.
On the real estate side. Yeah.
That's I feel like it is, I've had plenty of people on here who have had a failure for their first deal. And I'm always like, dude, more power to you, because it is so important, in my opinion, to get that a success under your belt, so you can really see the potential. You're going to have failures down the line for sure, but having that first deal that actually goes the way you hope it went is super important. And so that 4-plex, no money down, that's awesome that you're able to do that. I still haven't done that to this day. Get a deal, no money down, but that's
dude. The no money down topic. I honestly took that mindset with me. The Carlton Sheets course wasn't that great, right? But it kind of gave me the kernel of belief, and it gave me a couple little tools here and there. And I think the biggest thing was it opened me up that you can go get something without any money. And I'll give you an example even today. So we acquired a company about 1.5 years ago, a multiple 7-figure deal, and we did it no money down. It was a distressed seller situation. We put no money into the deal. Immediately brought in about $80K a month in new cash flow to our business. Not net profit, but cash flow. And then we optimized the business pretty quickly and got it to profitability. Building next door from me that we're in right now. So downtown Roseburg. We're in this tiny little town, and for my active income, I build businesses, Carrot, software company, another software company I'm a part owner in that's in the 8 figures. And I take my income and I put it into real estate. And for me, I love being able to walk to the building and touch it, and take my son in the building next door and bust down some of that plaster off this historic building to uncover the brick behind it. And all of the properties we have downtown, except for one, are no money down. And all of them are owner carry. And so the deals are out there.
Yeah. That's great. I mean, in being in the town yourself, I'm sure you have a name in the town. I'm sure the people that were selling it, they're like, okay, I know Trevor. I'll work with you a little bit on the terms. So that's awesome to hear. At what point, you bought this 4-plex, however many years ago, at what point did you start on Carrot? When did that idea come to you?
Yeah, man. So that I'm going to kind of buzz through this timeline, but dude, there were so many big changes that happened mindset wise during that, let's say 5, 6, 7, 8 years. So 2004, bought the property, was still in college, graduated. My wife and I moved up to Portland. She was going to school at Pacific University, and I thought I wanted to be a wholesaler. And so I learned the wholesaling stuff and never actually did a wholesale deal myself. And still today have not done one start to finish myself, but I've partnered at a lot of them now, from the marketing side of things. And I've got the deal guy or whatever. And so I started posting online. I use Craigslist. And so I launched a website, went to GoDaddy, And you could probably still find it today in the Wayback Machine, but it's like, I think it was trademark-RE solutions or something like that. But it was just this jumbled mess of a website that had everything on it, right? Talk to buyers, talk to sellers, talk to tenants, like everything. And I would go to Craigslist and I'd start posting on it for people who were looking to sell. And I got leads and I had some conversations and I went to meet some sellers. And I think for me, Gabe, I honestly gave up too early on it. And I saw something that for me was more interesting and matched my unique abilities more for what I was going to focus on for my career. But in that time, I learned how to generate leads. And so during the next 1, 2, 3 years, when I was living in Portland, I was working with mortgage brokers, doing some marketing consulting. I started working with some real estate people, and I got really good at generating leads online. One example was the guy who owned the mortgage company that I was doing consulting from. He walked over to my desk one day, and I was doing cold calling on Craigslist for about 6 months for this other broker. I was doing anything I could do to make money, Gabe, to pay rent. Like anything I could do. A little bit of marketing consulting for just, peanuts, a little bit of this, a little bit of that, just to pay the rent. And he walked in one day and he said, pull up the screen. And he goes, Google mortgage brokers in Portland. And I did. And up to the top was like Rose City Mortgage and this and that, whatever. And he goes, how do you get me there? Like to the top of Google. Because he said, if I can get there, and this is back in 2007 or so, he said, if I can get there, I imagine that'll be a lot of really good leads. That'll be really good marketing for us. And I said, I don't know, but I'll figure it out. And so over that next 12 months, dude, I did everything I could do to learn how to actually launch real websites that actually performed. Everything around learning how Google worked, how to create content that ranked, how to make a website convert then, because then we would get traffic to it. And I was just jamming on learning how to split test and do all these things that make a website actually perform and convert. And so over that, let's say 3-4 year period from 2007 or so to the end of 2012, going into 13, I had started 2 or 3 other businesses that were all web-based in the real estate space. And by that time, I generated probably about 80,000 leads in the real estate space online for mostly people I was doing work for. Generated about 7,000 private lender leads back from 2007 through 2009 for that mortgage broker. He had a fund and learned how to get a website online, rank it for things that investors would be going for. And we got a lot of applications that came through. Generated a lot of seller leads, a lot of buyer leads for mostly investors and agents. I just got in those circles. And then, dude, in 2012, I got burnt out. One lesson that I had learned, I read this book back then by a guy named Mike Michalowicz called The Pumpkin Plan. And I don't know if anyone can relate, but when you start a company, you're usually running away from something, right? You're running away from a job you don't want, an income ceiling that's capping you, people telling you can't do something, whatever it is. Your fuel is usually running away from something. It's freedom from. I want to get freedom from these things back here.
Yep.
And I did that, right? I grew it to where I was making a couple $100,000 a year between a couple little companies here and there, but when you get about 3 years into a company and you're no longer have your back against the wall of that thing you're trying to run away from, what happens oftentimes, I call it the 3-year turn and burn. What happens oftentimes, we start to resent the business we've grown. We're doing a lot of work that drains our energy. We don't have the excitement of the startup anymore. We're maintaining the business now more. And you look back week over week and you just go, man, I don't want to do the work in the business that I'd created for myself. And at that point, like I said, this is 2012, 13. I've been doing a lot of marketing for people, generated a lot of leads. I had a bunch of websites up for investors for private lending leads and some other things on this very side project. It wasn't making any money. It was more of a favor. And I hit this, I call them pain lines now, but I hit this pain line and I didn't recognize that when you hit these pain lines at 3s and 10s in your business, 100,000, 300,000, million, 3 million, 10 million, 30 million, you hit these pain lines.
Interesting. Yeah.
And dude, the pain line that I was experiencing was that $300,000 pain line. I didn't know how to delegate. And so I did everything in the business except for a couple of things my business partner did. And I also didn't recognize, Gabe, that this is what I fully build myself on now. And then I'll tell you how Carrot came out of this. It's kind of like the Phoenix rising out of the ashes thing. I also followed a lot of advice. That's good intentioned advice, but for me, it was bad. And the advice that a lot of people will get is this. Okay, draw a line down the middle of the paper. On one side, right, things that make me money that I'm doing, things that don't make me money that I'm doing. And now circle all the things that don't make you money that you're doing in your week and find a way to delegate those or say no to them or whatever, and focus as much time as you can on the things that make you money, right? I did that. The challenge with it is a lot of the things that made me money drained my energy. I didn't like it.
Oh, right.
So, but people told me that I was good at them. They paid me well for those things. And so I would do more of them. The more things you step into that drain your energy, it doesn't matter if it makes you money or not, the more you're going to hit this pain line and eventually self-sabotage or move back to what was comfortable.
Yeah.
And that's what happened. That's what I did. So in that period of time, man, I had 4 different companies, a couple investments, 2 of them died, had my main company that was making some money. And I just read the pumpkin plan. I'm like, dude, I got to trim it down. I'm not enjoying life. I got to trim this down. I trimmed everything down to one consulting client. And then I said, I'm going to figure out what's next. And what's next became Carrot. Once I had time and space to just clear the deck and say, I'm starting new. And that year I went from $250,000 net on my taxes to 2012. My tax statement found it a few weeks ago in the garage is 27 grand.
Nice.
So 90% cut in income.
A big jump, yeah, or a big dip.
Yep. But I took that skill set of real estate, generating leads, had these websites that were sitting here, and I saw an opportunity that was way bigger once I had a chance to trim down all the distraction and launched Carrot at the end of 2013.
Yeah. Yeah. What you said about that pain line, that really resonates with me. And I see that in my own, career, not as far as you are, but I see that kind of, you get to a point where what motivated you earlier is it doesn't motivate you anymore. Money, especially, it's not a huge, for me, it's not like a huge motivator. And once I get to a certain point, I have the money I need. And so getting more isn't necessarily better. So you get to a point and you realize, like, okay, even if this is going to make me a lot of money, it's not necessarily what I want to do. And so you have to change your paradigm, change your goals, your purpose, and realign your actions to the things that actually bring you energy. And I do feel like, I love that you said energy, because in my own life, I feel like that is the thing that's the true currency almost.
Yep.
It's, when you are doing things that bring more energy to you and your family and the people you're working with, that's the goal. That's the thing you're trying to go for. So,
and the real key, I'll kind of drop a little nugget on the energy side. The real key is recognizing the things that give you energy. Like, you have more energy when you're done doing them than when you started, and they make you money, right? So podcasting, back in 2016. So Carrot's already started about that time, where, multiple 7-figure company at that time. And I got to another spot where my energy was just getting drained. It was the next pain line between that 1 and 2 million that I needed to solve to get up over 3. And that's a whole different pain line. 1 to 2 million. It's a different solve, a different type of delegation, a different change in communication in your company than the $300,000 one, then the 3 million one, then the 10 million one. And on the energy side, you always continually have to prune the things that drain your energy. It's not a one-time thing. It's like, I do it quarterly. And every quarter I have this process I call the energy audit. And you guys can get the energy audit. It's just a worksheet, no opt-in required. I believe the team has no opt-in required still. Just carrot.com/energy. It's a 1-pager. I believe I might have a video up there with it now, but I'll go through that every quarter. Or if I just get to a spot, Gabe, where I'm kind of getting to the spot where I'm like, man, too many weeks in a row, I'm not loving the week I had, I'll pull out that energy audit. And you draw a line down the middle of the paper, same thing, but now you're changing the things on the top. Now I put energy give, energy drain. And then I'll do, on the energy drain side, write anything on that list on an average week you're currently doing that drains your energy. Anything at all, business, personal, all of it. On the energy give side, this is where it's key. Write down the things that give you energy, even and especially if you're not doing them right now, but they give you energy. Okay. And write that list down. Then you go back over the energy drain side and you circle 1 or 2 of the things that drain your energy the most, and write down how many hours a week approximately you put on those things. Let's say you've got one thing that's 4 hours a week, another one that's 7 or whatever. That's 11 hours right there. Gabe, for me, when I go into a quarter, that's the very first project I do now. And with my executive assistant, that's her primary job, is to take those 2 things, work with me, and figure out how to get them off my lap. It's either a process or delegating it or just saying, no, we're not doing that anymore.
Yeah.
And as soon as I got that 11 hours back, I go to the energy give side. And I do this before I create those processes for motivation. I go, once I get those 11 hours back, I'm going to now put these two things
Now
in my life.
This is my reward, this thing over
Heck
here.
yeah. And then you're just continually trading out all the time. And in that period, I went from 20% energy give, 80% energy drain. No wonder I wasn't wanting to do the work in the job I'd created. To about 2 years later, through continual quarterly pruning, it was 80% energy give. Nice. And at that point, when you're in your energy and you can really focus on the things that you're great at and drive revenue, that's when my income way more than 10x'd over 5 years. Nice. And blew through the 7 figures and into the 8 figures.
Nice. Yeah, I love that model. And for anybody who is interested, I just pulled it up, carrot.com/guides/energy. That's where you can get that sheet he was talking about. Yeah, I love that model. It's not something I do right now, but I think it's something I'm definitely going to have to do. I'm gonna have to get that sheet that you have there.
Yep.
But hey, I just took a peek at the clock. This is a shorter podcast, unfortunately, so I am going to have to move us on a little bit.
Let's do it.
Before we move on to the quick question round, we've been talking about your journey up till now. We've talked about Carrot, but I want to know on the real estate side, Carrot, it is real estate related, but of your actual investing, what are your goals right now? What are you looking at? What is your goals for 2024 for your active investing side?
Yep. Yeah. So what I do, I'm a buy and hold guy, and except for my local stuff here in Roseburg, which I'll kind of tell you about really quickly, everything else is me being a minority partner in bigger deals with people I trust. So the one over in Richmond, Virginia, that's a pretty big development with, I think it's 60, 70 high-end apartments on the top. We're going to take 10 of them, make them Airbnb, then it's going to be commercial down below. It's cool. In a real up and coming spot of Richmond. And so with those ones, I'll find those amazing operators, and I will invest in these deals where I put the capital in. We get it back in 2 to 3 years. So I get 100% of my capital return, get to keep the equity, get the big depreciation write-offs, get the cash flow. And I'll do that. I'll usually do 1 to 2, 3 of those a year, where I'm just keeping big chunks of cash, put them in. No, I'm not going to get it back for several years, but then stacking those up. And you're not getting the rewards now, but that's with the portion of my portfolio that I don't need the capital now. I'm investing for big, big gains in the future. And that's where a lot of people forget that. So the other part now that is kind of more hands-on is down here in Roseburg. Any downtown and rural usually is a little bit challenged unless you're in a really, really hyper cool spot like a Napa or whatever, right? Where there's a lot of tourism. And so we're going and finding these buildings that are just, they need some help. They've been around for 120, 130 years. They're in downtown, and we're investing, us and another developer. We just keep buying up all the buildings we can. And then we renovate the buildings. We're putting residential upstairs where there's not a lot of residential downstairs, making the retail amazing, raising the rents in the whole downtown, and bringing businesses in. And so that's passion for me. Like, I love that part of it. It doesn't make a ton of money now. But the way I'm buying these properties, we're buying them so right, the tenants are able to pay those down, and it's a fun project.
Yeah.
The other stuff that does make money on the real estate side, on the active side, is I partner with a couple of guys, one in Louisville and then one in Dallas, Texas, where I'm the marketing side of it. I'll bring in the leads for it, and they're the ones who partner on the deal, and we split those deals 50-50. That's a multiple 6-figure a year, 3-hour a month kind of a thing for me, where I get to keep my hands in deals and use our software to make those deals happen.
Before we continue on with today's guest, I want to tell you guys about a community I'm launching on School to help investors like yourself grow your own portfolio. In this community, you'll get access to all the docs I use, all the systems I've built, everything I've used to grow my own portfolio, as well as instructions and guidance on how to get out there and find great deals, how to finance those deals, and then how to manage them for great returns. Since we're just launching it, the price will be set at a measly $20 per month, and whatever price you join at is the price you'll have for life. We will be increasing the price as the group grows, so if you're at all interested in growing your portfolio along other investors, now is the time to join. I will put the link somewhere in the bio or on our podcast website at therealestateinvestingclub.com. So if you are interested, head on over there. With that said, let's get back to the podcast.
Nice, man. Well, hey,
Yep.
it sounds like you got tons of different models, different, ways to do real estate. And that's why I love real estate so much is there's not one way to skin the cat. There's tons of different ways you can execute and make revenue
Yeah.
in real estate. You can generate leads, you can do flips, you can buy and hold, you can tons of ways to do it. So love to hear that. I am going to move us on to the quick
Yep.
question round. Are you ready?
Let's do it, man. Let's do it.
Let's do it. It starts with books or any form of education. Could be a podcast, could be a Netflix show, whatever. Give me 2 recommendations, one for general life wisdom and then one for real estate specific.
Dude, I'll give you a real simple one for the general life wisdom. I don't have it here in front of me. It's first read it 10 years ago. I reread it again 3 years ago. I read it ever since. Jim Rohn's 5 Major Pieces to Life's Puzzle. The simplest read you'll ever use. Every time I mention that book, no one's ever heard of the book.
Yeah, I have.
But dude, it's an amazing, amazing book to get you to think about the different levels of how to really plan your life and nail that mindset. It's great. Every time I go through it, even at the 8-figure level, I'm making new notes on it that resonate. So Jim Rohn's 5 Major Pieces of Life's Puzzle. I'll give you I'll give you the business book that's more fresh in my mind that I've been using a lot lately. I'm a big fan of Dan Sullivan, was in his strategic coaching program a number of years ago. And the latest book that he made with Benjamin Hardy, I think his name is 10X is easier than 2X. Great book, man. It's like same thing. It's mindset, but for the business side, 10X is easier than 2X. Amazing book. Get those 2 together. And I think they'll be good for you.
Cool. Yeah, those are good recommendations. And I used to really be into Jim Rohn, and surprisingly, I have not heard of this book. So I'm gonna have to pick that one up. The 5.
Dude, no one's ever heard of it. Every time I haven't found one person who's went, yeah, I've read that. But I stumbled on it back in 2008 when I needed it. I needed to nail the mindset. And I set it to the side for over a decade. And as I went through the next pain line, the 10 million plus pain line, I'm like, I'm going to pick that thing back up. It worked in the past. Let me see if it works again. And it did. It was cool.
Nice. All right. Well, I'm going to have to buy that for a Christmas present for me.
Yep.
All right. Next question is for your younger self. So let's go back to the Trevor who was just getting started in his lawn design business.
Yeah.
Go back to him, look him in the eye, give him one piece of advice moving forward.
I think the biggest thing for me, dude, is recalibrating the definition of greatness or the definition of success. For me, I've learned that the definition of greatness is not about significance of yourself; it's about service. And every time I get to the spot where I'm thinking about my own significance and how big I need to grow here or there, I stumble. Every time I think about service and how I can serve others, they win and I win. So.
Awesome. I love
service
it.
over significance.
Absolutely. All right. The next question is about the people we work with. They are the reason that we see success in anything is getting together, combining our talents, our abilities, and going towards a goal. So, and this is a good question for you because you've spun up a number of companies. So if you were to start a new company, what would the first 3 positions you hire be, and what order would they be in?
Dude, so I'm going to make the assumption that I have no employees at all around me, right?
Yep.
So the first hire I would make is an executive assistant, 100%, because people make hires that are too high level that you pay too much when you actually need to get the person down here helping you with all the lower level tasks so you can do more of those high level things. So EA first. Number 2 is I would find the person to run or lead the business. That's something I didn't do with many of my first companies. One of them that's really successful now I did. And now I'm doing that with Carrot, really having an amazing operator step in so I can do great. So that's number 2 is a person who truly leads, owns the business. In the early stages, you want it to be a revenue-based leader, not just a COO. Pre-million, maybe even pre-3, the person has to be amazing at driving revenue. Okay. The third hire on that is probably something around. It's probably going to be something around marketing or sales. It's like we've got to get the lead gen in there. I mean, it depends on the skill set of that leader. Do we need a product person, a person to go build the product or whatever it is? I don't know. Depends on the business, but it's either a person to drive revenue along with that leader, or the person to go build the product and the person who's like the skill set of the craft that we're doing.
Perfect. I love it. All right, this is also a good question for you because it's about metros. I'm sure you see all the data because you guys Carrot websites are all over the U.S. So United States is a big place. There's a lot of opportunity, a lot of metros to consider. What is the metro you are most excited about investing in today?
Dude, that's a good question, man. I need to beef up on my different data, I think, because I don't have like one that jumps out for me. There's several that are working now. I mean, Louisville, we're in there for a very specific reason. It's working well. Memphis is still really, really good. From the multifamily side, we're seeing Dallas is still great. We have got a couple big properties there. So I think in general, some of those ones from the South that are more conservative, that have really good employment bases, but also still keep the costs pretty low. And that's where all those fit into that, from your Louisville to your Dallas over to Richmond, Virginia. Those are great ones. Up where we live, it's a little bit different, right? Your costs are higher with everything, and it's more on the liberal side of things, which does make some things tricky, but there's a lot of opportunity out there.
Yeah. All good markets. Dallas is one of the ones. I have 2 self-storage facilities out there, and I've been looking for more, but man, they are very hard to find because Dallas is a hot market. A lot of competition out there.
We're going to find more of those deals coming up though, dude, because you've on the commercial side, I think in next 24 months, we're going to find real deals coming out where people bought properties with shorter term loans. Cap rates now on a lot of those are going to be lower because the interest rates have gone up, and they're not going to meet their debt covenants. Like we've already seen that coming in. Right now, we're seeing properties pop up that never would have popped up a year and a half ago because they couldn't meet their debt covenants. Capital call, bam, they got to give the property up now. We're going to see a bunch of that, I think.
Yeah. That's what, I mean, you never hope for it because that means somebody else is going through a hard time. But hey, if it happens, I will definitely be jumping on that train. So
yeah, that's right.
All right. And that leads us to the last question. This is for the listeners. I'm sure people want to reach out, get in contact with you, learn a little bit more about what you guys are doing out there at Carrot, and all the other things you're doing. So what is the best way for people to reach out, and what can they expect when they do?
Yeah, let's go to Instagram. Follow me, Trevor.Mauch, Mauch. A lot of content over there on the entrepreneur side, on the driving lead generation side from the motivated sellers perspective mainly. And then my podcast, the Carrot Cast. You guys can find on any of the podcast apps or carrotcast.com. Same thing. If you want to learn how to generate leads, you want to drive more motivated sellers, you want to nail your mindset, anything in our world is going to help you with those types of things.
Perfect. I will put those links in the show notes. So if y'all want to reach out, just click a little more in the description. It'll pull down that full description. In there, you can find Trevor's links.
Heck yeah. Awesome.
All right, man. That wraps it up. Thank you very much for hopping on the show.
Dude, appreciate you, man. And guys, you guys are in the right spot. Dive deep with one person. Dive deep with Gabe and follow him. And dude, I'm grateful I'm able to be on this call with you.
Absolutely. Cool. For everybody who's here with us today, thank you guys for showing up. As always, you are the reason we do this. So if you guys have any questions whatsoever, reach out to me, Gabe at therealestateinvestingclub.com. If you guys want to support the show, all we ask, give us a like, subscribe, share, all that jazz. Other than that, I hope you guys have a great week. Keep rocking real estate, and I look forward to seeing you on the next episode.
Awesome.
All right, before I officially sign off, I have a quick announcement to make. If you're interested in becoming a passive investor in one of my deals, my own company, Kaizen Properties, is looking for capital partners for our upcoming projects. We invest in what are known as recession-resistant assets, mainly self-storage facilities, mobile home and RV parks, and industrial properties. If you're interested in investing and would like to learn a little bit more about my company, our investing criteria, and some of the previous projects we've done, go to the Real Estate Investing Club podcast at therealestateinvestingclub.com and scroll all the way down to the bottom of the page. Click on the Invest With Us button. That'll pop up the investor form. Fill that out, and we will reach back out to you as soon as we can. Or if you prefer a little bit more of a personal touch, you can reach out to me at Gabe at therealestateinvestingclub.com. So really, that is it. Again, it was a pleasure hanging out with you guys during this episode, and I look forward to seeing you on the next episode.